After backtesting over 3,000 trades, I discovered something fascinating that nobody talks about. It wasn't about finding the perfect strategy. It was about understanding 3 critical data points that transformed my trading psychology. Today, I'll show you exactly how I use this matrix to build unshakable confidence in my trading. And by the end of this video, you'll understand why most traders backtest completely wrong. Now, most traders think that backtesting is just about finding a profitable strategy. They spend countless hours testing different indicators, timeframes, and setups. But here's what nobody tells you. The real power of backtesting isn't in finding what works. It's in building unshakable confidence in your edge. When I first started trading, I did what everyone else does. I jumped from strategy to strategy, looking for the perfect setup, or holy grail. I even spent thousands on mentorship and automated trading systems. But after blowing multiple personal accounts and losing tens of thousands of dollars, I realized something crucial about backtesting that changed everything. Now, you might be wondering why most traders fail despite doing extensive backtesting. Stay with me because what I'm about to show you completely transformed my approach to trading. Here's the truth. Backtesting isn't about just collecting data. It's about training your mind to think in probabilities. When you properly backtest, you are not just learning a strategy. You are rewiring your brain to understand that any single trade is meaningless in the grand scheme of things. Let me show you my actual numbers. Total trades 1262, win rate 21%, average winner 3.92R, average loser 1R. Expected value 1.28R per trade. This might shock you. I only have 21% win rate, but here's why this matters. Most traders are obsessed over win rates, thinking they need to win 70 to 80% of their trades to be profitable. I thought the same thing until I discovered something fascinating through my backtesting. Look at the math. When I win, I make nearly 4 Rs, but when I lose, I only lose 1 R. This means even with a low win rate, I'm still making 1.28R on average per trade. Let's put this in perspective. If you're risking $100 per trade, a loss costs you $100, assuming you risk 1%. A win makes you $392. With a 21% win rate, over 100 trades, you will have 21 winners, which gives you $8,232, and 79 losers, which is $7,900. Net profit, $332. Now this is assuming I have a 79% loss rate. My loss rate is actually 45% due to my break-even strategy. This is why obsessing over win rate is dangerous. It pushes traders to take small profits and big losses, which is exactly the opposite of what works. Through backtesting, I discovered that my edge isn't being right more often. It's in being wrong small and right big. But here's what's even more interesting about this data. During my backtesting, I noticed something that completely changed how I view trading psychology. Even with this proven edge, this mathematical advantage, I still found myself hesitating on perfectly good setups. The numbers showed I should be confident, but something was holding me back. This led me to discover the second critical component of backtesting, something most traders never track. But before I share that, I want you to be honest with yourself. Comment below if you ever found yourself doubting a perfectly good setup just because your last trade was a loser. Or maybe you have skipped a perfect setup because you were still emotional from your previous loss. I see these comments all the time, and here's why this matters. The second crucial matrix isn't about your trades, it's about you. I started tracking these 3 specific things: how I felt before entering, my emotional state during trade, lastly, my reaction after closing. And by the way, you'll only be able to track this in forward testing and live trading environment, since there are no emotions connected with backtesting. If you want a copy of this journal, check out the link in the description below. Think about this for a moment. The same exact setup, the same exact strategy, but completely different results based solely on my emotional state. This is why most trader fails even with a proven strategy. They never track the relationship between their emotional state and their trading results. Now, instead of trying to control your emotions, which is impossible, learn to avoid trading during certain emotional state. Before I show you the third matrix, there's something crucial you need to understand about psychological conditioning. Most traders try to force themselves into trade without emotion. That is impossible. What my backtesting revealed is that successful trading isn't about eliminating emotions. It's about creating a system that works with your psychology. Think about it like this. When you backtest properly, you're not just collecting data, you're actually conditioning your mind to trust your edge. Every trade you analyze is like a repetition in the gym, building your psychological muscles. Let me show you exactly what I mean. When I first started trading, every loss felt personal. But after documenting thousands of trades, something changed. I started to see losses differently, not as a failure, but a necessary cost of doing business. This shift happened naturally throughout the data collection, not through trying to control my emotions. This psychological conditioning is what prepared me for the third matrix. The final matrix changed everything about how I approach the market. After analyzing trades across different time periods, I discovered specific windows where my strategy performed best. Asia session, 22% win rate, 3.69R average return. London session, 24% win rate, 3.74R average return. New York AM session, 25% win rate and 3.58R average return. But here's why this data is so powerful. It revealed a pattern I would never have noticed otherwise. Let me break this down further. First, I discovered that my strategy performs consistently across all major sessions. This was a game changer because it meant that I could trade whenever I was available. I just have to stick to my rules. For those of you trading while working a 9 to 5 like me, this is crucial information. I also talk about how to trade while working a 9 to 5 in this video here. This level of granular understanding transformed my trading in two ways. First, time optimization. Instead of trying to catch every single move, I learned to focus on specific time windows where my edge was the strongest. This alone increased my profitability by reducing over trading. Second, psychological comfort. This is perhaps the most important benefits. When you know exactly when your strategy works best, you stop feeling FOMO during other periods. You develop the confidence to sit out when conditions aren't optimal. But here's most traders get wrong about this kind of analysis. They look for perfect conditions. That's not what we are doing here. We are looking for edge that stacks in our favor. Think about it like this. If you know through extensive testing that your strategy performs best during certain market conditions, why would you trade during suboptimal times? It's like trying to sail against the wind when you could just wait for favorable conditions. Now, success with backtesting comes down to three elements. First, you need to understand that every trade is just one occurrence in an infinite series of probabilities. Second, you must accept that any individual trade can be a loser, regardless of how perfect that setup looks. And lastly, you need to trust that your edge will pay out over a large sample size. In my next video, I'll show you exactly what and how to backtest properly. You have to subscribe and turn on the notification bell so you'll know when the next video will be up. Now, I know what some of you are thinking, but what about changing market conditions? Wouldn't historical data become irrelevant? This is exactly where proper backtesting shines. Because when you understand market behavior patterns, you can adapt your strategy without losing confidence in your edge. The most powerful benefits of proper backtesting isn't the statistical edge you discover, it's the psychological edge you develop. When you truly understand your strategy's behavior through extensive testing, you stop seeing losses as failure and start seeing them as the natural part of the process. Comment below with your biggest backtesting challenge. Is it staying consistent with your testing? Managing the data? Or maybe it's trusting the results? Let's have an honest conversation about the real challenges of backtesting. In my next video, I'll be showing you exactly how to structure your backtesting process for maximum psychological benefit. Make sure you're subscribed and have the notification turned on. Remember, successful trading isn't about finding the perfect strategy. It's about developing confidence in your edge. Proper backtesting isn't about just collecting data. It's about transforming your trading psychology. Next, I'll go through the trades I took this week. What is up? So right now I'll be going through one of my better trades that I took this week. So my week has been pretty even. So I started a new 50k challenge, right? And first trade I took was on Monday, where I trade live in my Discord community. So if you're interested in trading live with me, do join my Discord server, link in the description below. Right, so I have this one trade which I think I risk 0.33%, right, and it netted me 1 point something percent return. Okay, so that's one trade for the live session. Okay, then Tuesday I did not take any trade, and Wednesday I actually took 2 trades. So this was a mistake on my end, and I lost 2 trades. First is platinum and then copper, so 2 losses. And on Thursday I took another loss, crude oil, see, another loss. And Friday, Valentine's Day, so in the morning I took a gold trade, which was a loss again. So in total there's 4 straight losses, and a lot of people will think that you're in a drawdown and you need to risk extra to make it all back. But if you have a backtested data set you can that you can fall back on, then it doesn't matter. All you need to do is just continue taking the same trades, following your same rules, following your edge, and profitability will come to you, right? So I did just that. I did whatever I could, taking the same trades over and over again, and it netted me this amazing runner, I would say. Right, so I'll go through that trade on platinum. Okay, right over here. So I want you to know that this is an inverted chart. Okay, so if you see price going up here, right, this is short. Okay, so the original chart looks like this, but because my eyes is more accustomed to looking at the long side, so I invert this chart. So if I remember correctly, a lot of people were like telling me it doesn't matter. I mean, why would I invert the chart and it defeats the whole purpose? Well, to me it doesn't matter, because a long is a long, a short is a short. So whatever happened on the long side, it can happen on the short side, right? So if you just imagine this red candles to be bullish candles and the green candles to be bearish candles, then everything makes sense, right? So in this example, I will just continue to explain it in a bullish sense, right? So to probably make it easier, I'll just change everything, right? So imagine this is how I trade, right? Click all, okay. Maybe it'll be easier for you, right? And yeah, so let's go to the trading hopper. So why I take a look at this market is because as of this time, right, on my higher time frame, 5 minutes, price was establishing bullish context already, right? With high, 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 low, high, high, low, high, high, low, high, 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 low, right? So my expectation when price was here is to continue higher. Okay, and we have my higher time frame bias established, and on the middle time frame, it's the same thing, right? We have high, 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 low, high, high, low. So, and this flush down to the MAs, I was expecting price to continue with a higher high. Okay, so over here, I went down to my entry time frame and look for my entry criteria. So entry cycle played out. We have a flush below the MA, reclaim. So I want you to know that my actual entry should be over here, right? But because at that point in time, I was calculating my risk, so it took me quite a while, and so I entered here, somewhere here. I think it was here, but it got slipped, so actually entered, my actual position was here. Okay, and my first partial was actually 1-to-1. So I'm right now testing a new trade management or risk management strategy whereby I take half at 1 hour. But because on top step and on futures, we can only open a full contract, so no partial. And for top step, a 50k account can only open max 5 contracts. So I took 5 contracts and I closed 3 contracts at 1 hour, securing the break-even profits. Why did I say break-even? Because once I secure the 0.5R, my original stop loss will still be here, right? Because I want to take the risk off as soon as possible, especially on the lower time frame scalping, right? So if price from here testing out, it'll be break even for me. Why I do this is because most of the time I see when price goes, and because if you remember, I have very fast break even strategy. So previously, if I were to follow my previous rules, on this push up, I would have shifted my stop loss to break even, and this trade would have stopped me out at break even over here. So this is what I realized. So I changed my risk management a little bit, or trade management a little bit. So in any cases where price come back to break even, I'm still in the trade, right? And so after I secure 1 off, I have 40% position left, right? Because I have 2 contracts left. Then price rallied to almost 3R. So this gives me a confidence that price should not come back to my entry area. And so I shifted my stop loss to break even. And then this retracement came. I was already ready to accept a break even over here. But then price continued higher, right? Making new highs on the middle time frame. So over here, I was actually waiting for around 5R to actually start managing my position. So once 5R has met, I trailed my stop loss to this low. So my second partial is always to trail on the lower highs. I mean the lower lows. So if you can see here, we have this. So I trailed my stop over here, but price did not tap me out and continued higher. So that's when I shift my stop loss again, and again, and again, and again, right? And eventually again. And if I'm not wrong, I trailed behind this candle also, which is why I got stopped around this area. Right. Why did I trail my stop loss so aggressively? Because on the higher time frame, at this area, you can see that price has already moved 4 pauses. So after 4 pauses, I was expecting a bigger correction on the higher time frame, which it didn't happen. So price consolidated and go higher. And yep, so I got stopped out my last position over here, which netted me around 8.93 R. So if you half that, it's around 4.47 R. And in total, this trade almost netted me 5 RR, even though it ran I think close to 10 R. Yeah, 10.36 R. Yep. So this is all for this week's trade recap, and I'll see you in our Discord channel as well as the next week's video. I'll see you.